Welcome to the DeFinity Market Strategy. I'm Paul Rodriguez of ThinkTrading.com. I'm joined with Manu Choudhary, who's the co-founder of DeFinity and the CEO of DMA Link. What's in the news this week, Manu? What are you looking at?
So it wouldn't be Friday morning unless we at least mentioned the SEC once. So it's my duty to kind of go over some interesting news that's happened. So
Yeah.
essentially, last week I said, perhaps incorrectly, that the SEC was coming for DeFi. It's not. It's coming for everybody. And you may or may not know about the long-standing ding-dong that's been happening between the SEC and Coinbase. So this basically started in the middle of summer. Coinbase were looking to offer stablecoin lending. So it's effectively yield farming to their client base. The SEC wrote them a letter and said, hey, if you do this, we will take legal action because you're breaking securities law. Now, that's odd because if they were really breaking securities law, then the Department of Justice would be knocking on their door, not the SEC threatening a civil litigation. So that's very odd. Anyway, in the last week, Brian Armstrong, the CEO of Coinbase, has really taken this not lying down, I think, and has had some interesting conversations, certainly on Twitter. One of the things he decided to do in his infinite wisdom was, in spite of what the SEC said, he had a landing page that said, coming soon.
Right.
And that has royally pissed the SEC off, who this week launched an investigation, a formal investigation into Coinbase and Brian.
Wow. Okay.
Which is really interesting. So
how do you think that will pan out then?
So I think it's going to be a challenge for the SEC because, to be fair, they gave no indication of what portions of the Securities Act that had been breached by this. And by the way, they haven't done it yet. They basically just got a cease and desist order to not do it. They haven't done anything. So technically, they haven't done anything wrong yet. They've just, I think, just waved a red rag in front of the bull that is the SEC. But let's not forget, Coinbase is very well capitalized. They're backed and funded, certainly during their venture rounds, by some very, very large funds who've got a lot of ammunition and a lot of legal firepower. So it's going to be really interesting to see how this plays out. But I think the SEC has maybe picked a fight with someone who's strong enough to fight back. So I'm intrigued with how this plays out. But it will, I think, set the precedent for how this entire industry is treated by the regulators going forward.
What do you think's behind it? Do you think they just want to have greater control? Are they worried about malpractice of some kind? I'm not suggesting at all that there has been any, but is that, do you think that's their motivation, or is there another motivation that we could just speculate
I don't think
on?
so. I don't think so. I think this just goes back to what Gary Gensler, my favorite person in the SEC, keeps talking about. He does not like any form of decentralization. He believes everything should be decentralized. Effectively, what Coinbase is doing by introducing yield farming is adding elements of DeFi, which they've already said they have a massive problem with. So I think this is the issue. They don't have, they have no problem with Coinbase's operations. They have no problem with anything they do. This is the only sticking point. So this ties back to, again, what we've been discussing over the last couple of weeks about the view they've taken and the problems they see with this sector.
Yeah.
But that's that was certainly interesting news. The other really interesting news was that last week we saw a pretty significant dip. So OpenSea, which is the largest NFT marketplace in the world, their volumes dipped by just over 50%.
What caused that?
Well, a lot of the experts in the NFT space are saying this is probably the top of the market. This is an indication. This is it. I don't think this is the case. The NFTs are such strange creatures to value. It's very difficult to put a price on these things. They're not like a digital asset where you have something of substance to get your teeth into.
Yeah.
So I don't think, I think they will go up and down irrespective of what the broader market does. I think what may have done something to put a bit of a damper on the price is one of the execs of OpenSea got busted doing things he probably shouldn't have been doing. So he was going out into the market and he was acquiring NFTs for the square root of not a lot. NFTs that he knew would be showcased by OpenSea within the next few weeks, and then as the price went exponentially higher, he would dump and stupidly used a MetaMask wallet linked to his own name. So again, not the brightest person in the world, I don't think, but that might have been perhaps a bigger driver of this, with people raising some concerns. Now, I think it's interesting. In Cointelegraph, they said that he was committing insider trading. Well, that's not insider trading. It's definitely front running, but that's not illegal. But that's not to say it's unethical.
Well, it's not illegal in coins at the moment.
Digital assets.
Digital assets. But that, to be fair, that could be what the SEC are worried about. It is something where it is a bit of a Wild West. Things do need to settle down, just to give sort of balance to the argument, perhaps.
Yeah, look, potentially, but let's not forget, we've had some of the largest financial institutions in the last 12 months be given billion-dollar fines, whose name shall remain nameless, but I'm sure you can Google them, for manipulation, price fixing, front running in the precious metals market. And these are some very large firms. Do you know how many people got fired?
Yeah, well,
nobody.
Yeah.
But they didn't get their bonus, so I can see why they'd be sad.
I see.
Who is the SEC really out there to protect? Is it me and you, the end user? Let's not be naive about it. It's not. It's obviously the large financial institutions that have a vested interest in making sure they stay on top of this game, and they control how the crypto market evolves. So I think that's the other driver here.
Sure.
But the final bit of interesting news. So about 2 weeks ago, there was a private bank I'd never heard of until they did this, called Goldman Lampe. Nothing to do with Goldman Sachs.
Okay.
Actually, their lineage. They're an old German bank.
Sure.
And I believe it's similar to Berenberg bank, basically. But essentially, they went to the market and they bought about 150 million euros of Monero, which is very interesting. And they did it because they wanted to protect the privacy of their ultra high net worth clients. So, and again, this is what you and I have been talking about for a while, is people will eventually realize that Bitcoin is a surveillance tool, that you cannot do anything in Bitcoin without being tracked and traced. So if you're a high net worth with, 10,000 Bitcoin in your wallet, you're a target. You're putting yourself at risk because it's very easy to work out how much you have.
But you'd have to work out who owns the wallet, though, wouldn't you, for it to be linked to a person? You just, that element is still secret, but you can obviously track all the transactions because they're in an open ledger. Is that? Am I right in saying that?
Absolutely. Yeah, that's great. So basically, Bitcoin is pseudonymous, but it's not anonymous, whereas Monero is anonymous.
Yeah.
So that's the fundamental difference between the two. Now, what's I think fascinating is this week they launched a new bank account that basically has, in one user interface, crypto wallets for Monero and Bitcoin, and fiat on-ramps. So it's basically fiat current accounts for sterling, euros, and dollars, I believe, and a bunch of other currencies that I don't much care for, and also Bitcoin and Monero, which is fabulous. So I think that's a very interesting move, and I think they are looking to target the crypto community with that kind of banking.
Well, I don't want to put you on the spot, but I'm about to. Have you heard of Ghost? Because I heard that was an updated version of Monero. What's your view on that?
So Ghost Protocol, yeah, look, I know about it vaguely. I mean, I believe that this when was this was created about a year or two ago. I don't fully understand the tech behind it, but I do know
if you don't understand it, then it's going to be really hard.
So I don't fully understand the tech behind it. I do know that it is more secure than Monero, but Monero is my favorite, not because it's the most secure. It's definitely not. And by the way, in terms of Ghost, it's good. It's not a patch on things like Pirate Chain. Pirate Chain is the most secure cryptocurrency that exists today. But it's not my favorite, and it's not my favorite purely because of the network effect. Monero has got the third largest development team in the world, behind Ethereum and Bitcoin, who are the number 1, number 2, respectively.
Yeah.
Whereas, how many devs has Ghost got? Half a dozen. It just takes a bus crash for everyone to be wiped out. So
I see.
It's one of these things that's interesting, that I quite like.
But there's risk.
I don't own any, but there's huge risk. This is why I love Pirate Chain. I think the team's amazing. I have a very tiny holding, purely because the network effect is so small. There's just not enough people that own it. There's not enough devs on the project. Well, so that's one of my factors.
Love hearing what you've got to say. That's so interesting. I'd like to ask some more questions about Monero and why it might not be safe, but we're going to save that for next week, because we want to keep these videos relatively short. But thanks for your thoughts there, Manu. Really excellent stuff. So we're going to move over to the charts now and see what's going on in the financial markets. So I'm just going to share my desktop here, and hopefully you can see what's going on. Now, we've got a Fed meeting next week, and we need to break out of this range. I know we've said it for the last few weeks, and this is where patience in the financial markets has to pay off, really. We're waiting for this range to break out in US 10-year bond yields. They have been going sideways. There will be a big move. It'll either be a massive move to the upside, and all the people who talk about inflation will be saying that they've been vindicated, or Cathie Woods, who's apparently saying that she reckons deflation is coming, will be vindicated by this being some form of consolidation continuation pattern and a move down to, say, 0.5%. So there's going to be a big move one way or the other. And at the moment, we're still just sitting in this range. Now, I've got a lot of sympathy for the inflation argument, and there are various reasons for that, not least the base metals moving higher. and energy moving higher, and other things, crude oil, natural gas, etc. But it is patchy. Not everything is moving up, and we just have to wait and see. Now, as a leading indicator, I like to look at the second biggest, I suppose, bond market out there, or the biggest European bond market, being the Bund, the German bonds. Now, German bonds, just as a reminder, 10-year yields are actually yielding negative rates. So what that means is that if you put money in bonds and hold them to maturity, you're guaranteed 100% to lose money on the yield, because you're going to get back less than you put in. But this negative yield is actually moving less negative. So we're moving more towards a positive stance, which is what we'd expect to see if interest rates are going to start to go up and the market starts to demand a bit more yield for these government holdings. Now, this is the chart of the Bund, which is the opposite. So the previous chart was the yield. So you can see the yield is negative, but this is rising. So this is the same type of chart as the US yields, which are at the moment in a kind of crossroads, and we're waiting to see which way it'll go. But if we look at the Bund, we picked up on this double top pattern, and it's been going down every week and not holding any support along the way. So we even got a break of this trend line, and it's still going down. Now, I put it in the weekly about how we're coming into a support zone. That support was support and resistance seen on the way up, and also some significant levels where the market reacted previously. So I'm looking for some support to come in, but I've drawn this downward trend line, and until this line is breached, I think we have to maintain a inflationary risk environment. In other words, everything's tipped slightly towards inflation and higher bond yields than the other way around. But it's a fascinating argument because there's really smart people on both sides of it. And as far as I'm concerned, I just look at the charts, let the charts tell me where the markets are going to go next. But it's really interesting that some of the analysts out there who are normally right on what they say that are so divided. So I was hearing that the dollar had weakened, and again, that's a really important asset to look at in terms of whether stocks are going to go down, whether people are going to move into precious metals, and obviously for crypto assets as well. And I can't see any weakness in the US dollar, so I think it's one of those stories that the market has got hold of, but there's not a lot of evidence to show that it's actually moved very much either way. I mean, if anything, I think it's moved up, and it still risks moving much higher over the coming months. So that's why I'm maintaining such a cautious view on crypto assets and the stock market, because a really sharp move up in the US dollar could have a big impact on the rest of the market. Now, one of the strongest currencies out there is the Swiss franc. It's always been a neutral currency, neutral country. There's a lot of flows in terms of holding gold, Swiss bank accounts, all that sort of stuff. So the Swiss currency is normally very, very strong on the global stage. The US dollar has actually just broken out slightly against the Swiss currency. And I find this quite interesting, because if it can get through this 0.9273 area, if it can close above, then it will be moving up to the 0.9478 area. And that would create a massive reversal pattern. Now, I wouldn't normally be looking at the Swiss franc to weaken. It normally be other markets like the euro or maybe sterling, or the commodity currencies like the Canadian dollar and the New Zealand dollar. So the traditional risk on. But the fact that the Swiss franc is weakening is a very interesting development. So I'm watching that very closely. So I'll just show you the Swiss stock market, which again we highlighted because it was one of the strongest markets on the way up, and it made a top that we identified. And it came back to its trend line, which it just walked straight through. So now this trend line is broken. And again, I put in the weekly, you shouldn't really invent patterns. You've got to wait for them to complete. But this, if it continues down, will hit this 11,800 level, which was massive on the way up. And this could be turning into a head and shoulders pattern, which is a much bigger reversal pattern. The thing with the equity markets as they stand right now, they're currently reversing from very small patterns. So we can call a retracement, but we can't call a massive retracement. We need a bit more evidence. So I'm taking sort of one step ahead and saying, well, look, if this does become a massive retracement, what are the signals that we should look out for? What are the levels where the market could retrace to and potentially bounce from? So The Swiss stock market, being one of the strongest in Europe, is now weakening. So that to me is an interesting development. So all the markets are at or close to small topping patterns, and we need to either reject those quickly and continue in the upward trend, which would be suggesting that interest rates are going to go down. It would suggest that more money will be flowing into the system. It would suggest that more money will be flowing into crypto assets, or we will see a correction in the market and people start to pull money off the table. Now, looking at the S&P 500, again, it's just a very small top, so it's nothing to write home about yet, but we have to still be aware that it could potentially move into something larger, and what levels should we expect if it does break. Where does this become a much bigger proposition? So again, looking at the VIX index, which was on my screen, it seems to have disappeared. I'll just pop that back on. The VIX index is still within this range, but it's holding gains. So it's come off, it's rallied, and it's staying within a range. So it's not as though this is trending back down. We need to see this blue line break before I can be more confident that we're going to move back into a positive S&P, Nasdaq, bullish equity story going forward. So at the moment, that's in the middle of the range. I think we will get some form of clarity as we go into next week. Maybe the Fed will make people, decide which side of the fence they want to be on, but we shall see. So a quick look at the Nasdaq, similar to the S&P. It's off the high, but nothing to write home about. Still not a major top, but interestingly, stocks like Apple have suddenly had quite a big correction, and Facebook. So there are cracks appearing in some of the strongest tech stocks out there, which could be a leading indicator. We're gonna have to wait and see, but it's enough to sort of raise some eyebrows about whether we're near a very significant top or not. Now, I'll have a quick look at gold and silver because I know everybody is interested in the trend in gold and silver. And just to say that gold and silver are still within these ranges. So I've not put them in the weekly, but just because we're waiting for a breakout, and until this is resolved, i.e. if it breaks above this resistance line or takes out this low, we're going to be stuck in this range. So I'm just in a holding pattern there. So I'll show you silver as well. It looks extremely similar. It's just stuck in a range. It could easily go downwards and take out long positions before it goes back up again. And palladium, because you can see, like we talked about this before, about how negative palladium is. It's still going down. So I don't think we can fight this market. There's not the evidence that there's broad interest to hold precious metals at this point. But I can understand the market wanting to buy some on a hedge, but the trends don't quite justify it at this point in time. So holding patterns, we'll wait and see. I am very bullish on gold and silver longer term. I do think they will turn around. I also think all the precious metals will turn around at some point, but this could be for later this year and possibly early next year. So I'm just waiting for this to happen. Now, onto the crypto assets. Where are we with Bitcoin? Well, we're still in this range. We had this big rally. It failed to get through what I call my Rubicon level, which is the 54,000 point. If it can get through there, then I will automatically turn bullish and we'll look for 100,000. Whilst it's below, I'm expecting this to range trade, possibly even trade lower. It may frustrate us a little bit as we go to the end of the year. But then I do believe that once this consolidation phase is over, it will then pick up and then we'll go back into a bull trend. So it's not that the situation is necessarily going to be bearish longer term. It's a question of timing, whether we get a move downwards and then a move up, or whether it just goes straight up. Now, there's not enough evidence to say that it will just go straight up, so I've just got to wait and see. But I noticed that there's sometimes the markets repeat in what we call fractal patterns, and this top here is starting to mirror this top here, but it's just on a slightly smaller scale. So if it does play out, and sometimes this can work pretty well, and obviously there are times when it doesn't, but if this works well, then we'd see a little rally up to say the 49,000 level, maybe even touch 50, then consolidate and come all the way back down, and we get this sort of correction over here, which would take us back down to 42,000 and possibly towards 37,300. But we're very much at a crossroads. There's no point making a big call on the market right now. I hope it goes up. I mean, I would like it to go higher, and but what I want is completely irrelevant to what I'm seeing. I can't justify that yet. The chart patterns have got to be confirming, the view before I give it. Now, Ethereum has been doing much better. I'll just take this off so you can see it a little bit clearer. Ethereum has been a much better market compared to Bitcoin. So it's much nearer its high. Again, we're still in this consolidation. I know there would have been some attempts to buy it, and the market has rallied. It's had a bit of a rally, now it's come back off again. So it feels like a market that just wants to frustrate. So I'd rather sit and wait until we get a clear signal. But if I had to buy it on a spread, I would definitely buy Ethereum rather than Bitcoin, or against Bitcoin, because I do believe that this, some people call it a cup and handle or rounding bottom, or whatever you want to call it. This is showing that there's pressure towards the upside. Normally, when this sort of thing resolves, you get a really strong move. Now, that could be a strong move of everything moving up. I mean, I don't know at this point, but all we can say is that the spreads are definitely favoring Ethereum over Bitcoin. And unless it breaks this 0.0695 level, I'm going to stick with that view. We are seeing a retracement in the really hot coins like Solana. That was doing extremely well, and it did need to correct a little bit because it just got a bit overbought in the short term, and so these trend lines that I put in are breaking, but that's fairly normal, and I'd rather that there wasn't so much news out there about this particular coin being bullish. I prefer it to go a bit quieter, which it usually does when it goes into a correction and a sideways consolidation, and then it can regroup and then move back into its upward trend. So I still think it's bullish. I still like this chart, but I don't think it's the. I think it shows that the market has got fragmented in the sense that there are individual assets that are doing well and some that are not doing so well. And it's a stock picking in the old, to use an old term, it's a stock picking environment rather than a broad bull market. But there's still opportunities out there.
Yeah, sure. Look, the only other thing I was going to mention was, it's interesting. I've been hearing the same things from everything I've been reading, which is that, there's a lot of dollar weakness, which is the opposite of what's really happening. And I think when you have an environment where you're going to see a lot more dollar strength, it becomes very difficult for really anything, equities, crypto, digital assets of any nature, gold, silver, to rally. So I think we probably will see this correct. The only thing that concerns me about this is the number of people I'm now seeing calling for imminent stock market crashes, which in my head suggests it's probably not going to happen imminently. It's probably going to happen over the next month or so.
Okay.
But again, on the same page as you, I think the week of the 27th of September to the 11th of October, I think, is going to be very, very interesting. I'm not as concerned with the FOMC meeting. They're going to say that the same useless nonsense they normally say, which is as vague as possible. Realistically, they cannot afford to increase or hike interest rates. It just they cannot afford the interest.
Yeah.
Effectively, they need real interest rates negative for as long as possible, so that they can actually afford to use inflation to essentially debase the value of their bonds. And look, I think it will be a very interesting couple of weeks while we see this consolidation.
Yeah, the thing with the FOMC meeting, it's not necessarily what they might say. It's just that what the market uses an excuse to break out of this range from. So very often you see the market poised to break out, and then it does. And the FOMC, they may just say exactly what you've just said, nothing in any way different to what they've said possibly the last 10 times they've met, but the market reacts to it differently, and then the media jumps on it and interprets it in a way that perhaps they didn't even intend, just because it's a post hot rationalization of what's happened in the market. So I look for events. I mean, I'm a technical analyst, so I'm not really bothered about these meetings per se. It's just from my perspective, I'm looking for how the market reacts or what might trigger a reaction. But the point you're making is absolutely valid. It's a really good one. So in the weekly, I went off the beaten track with a crypto asset. I'm not a complete expert on all the crypto assets out there. I think the communities know possibly much more about lots of different coins. But if there's something that you want to look at, if you think it'd be interesting, drop us a line, drop us a comment, and I'll look at it in the weekly, or we'll look at it on this show, because it's always interesting to look at new opportunities, see what they look like technically, see if something's building up. So once again, thank you so much for listening, and we will catch you next time.
Thanks, Paul.
Cheers then. Bye now.